please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Just a while, let's start with the top story we're tracking for you this evening. The GST Council has unveiled a new, simpler return filing process. Currently, the industry is filing, remember, multiple returns, and the goal is essentially now from a multiple return regime to move towards a single GST return regime every month. Revenue Secretary Hasmukh Adhia unveiled a three-phase process. The GST network will take 6 months to set the stage for this transition. Incidentally, though, the Council has also now decided to make GST network a fully public-owned entity. Here is the Finance Minister himself, Mr. Arun Jaitley, and Finance Secretary, Mr. Hasmukh Adhia, explaining the new simplified return filing process.
This return filing process, because the preparation of the new alternative returns and its implementations, the software necessary for this, would take about 6 months. That has been approved by the Council today, and within a period of 6 months, that would be now made applicable itself.
We will try to bring down this gap between the provisional credit claimed and the credit which is otherwise admissible as per the seller's information. And after 6 months, once we find that the rate is reducing, the gap is coming down, we will switch over to the actual implementation of the GSTR new return system, in which all B2B sellers, B2B people will have to put details of all their sales invoices, and the only way to get input tax credit will be if your seller has uploaded the invoices online.
Well, that's the Finance Minister and Mr. Hasmukh Adhia on how they have simplified the process. Meanwhile, the GST Council could not find consensus on imposing a sugar cess, remember, which we had reported some times back. States like Uttar Pradesh and Maharashtra have made a pitch for the cess, but states like West Bengal, Kerala and others have opposed it. And in an effort to find middle ground, Finance Minister Arun Jaitley announced the formation of a panel of ministers. For more on that, Sapna Das joins in with the latest. Sapna, take us through what must have been, I'm guessing, a combative GST Council huddle. Take us through the information you have.
Well, there was a specific proposal of a sugar cess levy of up to 3 rupees per kilo of sugar. This would have yielded annually around 6,700 odd crores. But having said that, probably the important point to be noted is what the Finance Minister has observed. He has made it clear that, you know, there will have to be some kind of a revenue raising mechanism or some kind of option that maybe have to looked into to address these kind of contingencies. Today, it's the sugar industry having unpaid areas of around 19,000 crores to the sugarcane farmers. Tomorrow it may be something else. So this group of ministers, which is expected to be set up quickly within the next 2 days, because the FM has indicated it's a matter of urgency, will not be surprised if it also looks into this particular aspect, that should it be done through revenue raising, should it be done through raising tax rates, or should there be an alternative mechanism, or should it be a cess road? What are the options and what are the items on which this kind of thing can actually go ahead? So that is the point to be noted.
All right, Sapna, many thanks for that report. We also spoke exclusively with State Finance Minister to get a sense of where states stand on this sugar cess levy issue that Sapna was talking about. But let's listen in to the Finance Minister himself on this issue first.
Next item before the agenda was the imposition of a cess on sugar, particularly considering that the cost of sugar has risen beyond rupees 35 per kilogram, and the market price is between 26 to 28 per kilogram. And the sugarcane farmers are in deep distress. And therefore, can we impose some kind of a cess?
All cesses have been subsumed in the GST. Now, if you are going to bring a cess for a particular commodity, there are other candidates as well. I am, for example, in Kerala, I said, okay, then let's have a cess for rubber. Our rubber farmers used to get some 200 rupees per kg, are getting only 120, 90 rupees, between that range. So why sugar alone? We had to support these farmers also. So that was the thing. So it has to be a general thing. On the hand, if you want to support sugar farmers alone or sugar mills alone, then go for a general budget. This 10,000 crores of rupees will constitute hardly 0.5% of this whole central budget. So they have very buoyant direct tax revenues, which have been very buoyant current year. Therefore, let them to the budget route support it. Why bring in complicate things by bringing a cess? And if you are bringing, then well, rubber also must be compensated.
Already in the law itself it is written that GST Council can take a decision to impose cesses. So it is not a distortion. Already compensation cess is there. And this compensation cess is coming by imposing cess on 8 or 9 items like liquor, like tobacco and other products. So it is not that it is a distortion.
Punjab was not opposed to the sugar cess per se. What we were actually opposing was not this tax per se, but the method. They were trying to breach the sanctity of the GST legislation. So what Punjab suggested, there were 2 or 3. The Punjab's argument, one was that if you impose this special cess just for sugar, then what stops states, say in Punjab's case, potatoes or cotton, because every sector of farmers are in distress. So this will actually open the floodgates and distort the sanctity of GST. So, and what Punjab had suggested that why don't we just raise the tax rate from 5% to 12%, and let this extra 7% which is coming in, let that be used to compensate the farmers of India wherever they are.
चीनी के ऊपर सेस लगा दो, ये था प्रपोजल. 3 रुपया पर केजी सेस लगा दो. इसके मतलब जो चीनी खरीदते हैं उनके ऊपर पूरा ये थोपा गया. उनके जो 3 रुपया मिला उनसे कहाँ जाएगा? जो चीनी के मिल है, जो चीनी के ओनर हैं, उनके पास जाएगा. वो देंगे फार्मर्स को. पहले बोला 10 स्टेट इसमें है, हमने हिसाब करके देखा 5 स्टेट है, 10 नहीं है. सवाल ये था कि जीएसटी में सारे सेस एब्जॉर्ब कर लिया. जीएसटी हमने सेस छोड़ दिया है, सैक्रिफाइस किया है, कुर्बानी किया है. आज क्या हो रहा है? एक आइटम के लिए पूरा जीएसटी को डिस्टेबलाइज कर रहा है.
आप देश में जीएसटी कानून लेके आए. आपने कहा साहब 1 टैक्स 1 नेशन का कॉन्सेप्ट होगा. देश के सारे टैक्सेस, सारे सेस सब्ज्यूम करके हम एक टैक्स बनाएंगे जिसको हम जीएसटी बोलेंगे. उसके बाद तरह तरह के टैक्सेस नहीं देने होंगे देश में. आप फिर कह रहे हो नहीं जी 3% शुगर के लिए अलग से लगेगा. फिर कल को मैंने आर्गुमेंट लिया साहब, कल को कॉटन इंडस्ट्री वाले भी आएंगे, वो भी कहेंगे साहब कॉटन फार्मर्स की हालत बहुत खराब है. आप शर्ट पे, बनियान पे, कपड़े पे, सूती कपड़े पे, सब पे 3% टैक्स लगा दो, 3 रुपए एक्स्ट्रा कर दो. परसों फिल्म इंडस्ट्री वाले आएंगे. फिल्म इंडस्ट्री, महाराष्ट्र सरकार आके कहेगी साहब हमारी फिल्म इंडस्ट्री बहुत डूब रही है, आप सारे देश में सिनेमा महंगा कर दो क्योंकि फिल्म इंडस्ट्री को बेल आउट देना है. और आयरन इंडस्ट्री वाले आएंगे, वो कहेंगे साहब हमारी इंडस्ट्री डूब रही है. प्रॉपर्टी इंडस्ट्री वाले आ जाएंगे, रियल एस्टेट वाले, वो कहेंगे साहब हमारी इंडस्ट्री डूब रही है, आप हमारी इंडस्ट्री को बेल आउट करने के लिए 3% टैक्स बढ़ा दीजिए. फलानी, और टैक्स मत बढ़ाइए, आप एक्स्ट्रा कर दीजिए. जो पैसा सेंट्रल गवर्नमेंट को जाएगा और सेंट्रल गवर्नमेंट फिर राज्यों को, कुछ सिलेक्टेड राज्यों को दे देगी. तो इस पर घोर आपत्ति थी. काफी देर तक इस पर डिस्कशन चला. अब ग्रुप ऑफ मिनिस्टर्स तक गया है. हमारा इसको हमारा 2 ही फंडामेंटल विरोध है कि 3 रुपए किलो चीनी महंगी करना कहीं से भी आम आदमी के पॉइंट ऑफ व्यू से बहुत ठीक नहीं है देश में. दूसरी बात, जब आप जीएसटी को 1 नेशन 1 टैक्स के कॉन्सेप्ट में लेके आ रहे हो, तो आप ये पिछले दरवाजे से नए टैक्सेस लगाने का बहाना क्यों ढूंढ रहे हो?
Well, there you have it, a whole host of opinions coming in there. Clearly, the state finance ministers are split on the issue of a possible cess on sugar. Of course, a group of ministers will take the final call. More from GST now. The GST Council meeting also saw some states express serious concerns about their revenue situation. In fact, sources are now saying that only 2 states are actually reporting a revenue surplus, and 13 states and union territories are reporting a revenue deficit of as much as over 30%. For more on that, Timsi Jaipuria joins in with the details. Timsi, what are you picking up?
Well, as you rightly mentioned, the state finance ministers and the GST Council today took a detailed deliberation on the revenue position, and states did present their concerns when it comes to the slipping revenue collections that have been coming so far in the GST regime, that is the 3 quarters of GST. Now let me run across through the details first. There are only about 2 states which are currently seeing a revenue surplus of about 4% and 1% respectively, that is Manipur and Arunachal Pradesh. Let me correct, Mizoram and Arunachal Pradesh with 4% and 1%. Manipur remained a revenue neutral state. 31 states are facing revenue deficit under the GST regime. And when you see the details of it, in the range of 0 to 10% of revenue deficit, there are 6 states including Delhi, Tamil Nadu and Maharashtra. Similarly, in the range of 10 to 20%, there are 7 states including UP, West Bengal, Gujarat, Haryana, Kerala and Rajasthan. Revenue deficit ranging from 20% to 30% has 5 states such as Karnataka, Goa, MP. Revenue deficit in the range of 30 to 40%. There are majors like Chandigarh, Punjab, Bihar, Uttarakhand, including 9 states and union territories. And yes, not to forget, 40% and above, which is a serious cause of concern. There are 4 states and union territories, with Daman and Diu being the highest in the revenue deficit position, 74% of revenue deficit, Dadra and Nagar Haveli 59% of revenue deficit, and Puducherry at 45% of revenue deficit. Government has promised to try and take concern of this, try and see how best they can protect the revenues. But yes, currently there are 31 states and union territories which are facing a revenue deficit. Let's see what happens in the next financial year.
All right, Timsy, many thanks. You were armed with all the numbers there. Thanks for joining in with that story. Time for us to slip into our first break here on What's Hot. But up next, BJP releases its manifesto for the state of Karnataka, gives agriculture the top billing, also makes a slew of promises specifically meant for women. We get you that story and more when we return. Welcome back. Straight on to all the market action. Markets tumbled in trade today. Almost all sectoral indices ended in the red except for Bank Nifty. The Nifty managed to hold on somewhat to the 10,600 mark, ended with cuts of more than 1%. What about the Sensex? The Sensex breached 35,000 mark, shed 188 points in today's trade. The mid-caps mildly underperformed the benchmark indices, ending 55 points in the red. Banks outperformed with gains of 40 points. Meanwhile, SEBI now, interestingly, has allowed exchanges to extend their trading hours in equity derivatives between 9 a.m. and 11:55 p.m. This will be effective from the 1st of October this year. The exchanges will have to seek prior approval from SEBI before making changes. Hectic efforts are on to save over 40,000 megawatts of power projects from going to insolvency courts or to liquidation. But bankers and the government finance companies, that is PFC and REC, are divided over exactly how to go about it. For more on that, Lata Venkatesh joins in to explain why they are divided and what's the way forward. Lata, all yours.
Okay, first let me refresh your memory. In February, the Reserve Bank put out a circular asking banks or telling banks that all stressed loans over 2,000 crore will have to be either resolved in 6 months or taken to the NCLT. Now, the blow falls largely on power projects because about 10,000 megawatts of power doesn't have gas and another 20,000 megawatts doesn't have power purchase agreements. And these are definitely going to the NCLT, but you may not find good buyers in the current state. So bankers are trying to resolve it. There was a meeting in SBI with bankers who own largely, who have exposures to these power projects, and PFC and REC. Now, what the bankers have proposed is that take 14 fully completed projects and then take the sustainable portion of the loan, keep it with the project. The unsustainable portion should be partly written off and partly converted into equity. And 51% of the equity is sold to a good promoter, either a stressed asset fund or another power company. And the banks also could retain a small portion of the equity. The current promoter should be reduced below 25%. And the hope is that they will get some money because of the quality of the plant. The bankers, of course, are hoping that the government could have the NIIF, the National Infrastructure Investment Fund, also probably contribute some money and buy some of the power projects. But they're not expecting the Reserve Bank to change the circular. Now, the PFC, REC and the government have a different point of view. They believe that even if you try to find a promoter, the promoter will take the shares at absolutely basement prices. So they will be selling the plants for a song. So what they should do is all these stressed power plants should be put into a special purpose vehicle, that company will be owned by all the lenders. But it will be run at arm's length. It will have all these power plants which are transferred to this SPV at net book value, not at a loss. And it will be run by some power company which is contracted to run them. And when the situation in the country improves and demand improves and more PPAs are there, at that time, when the economic value of the plant is when the market value is good, at that time these plants should be sold. But obviously the second plan requires that the RBI does not force the banks to mark all of them as NPA, because in that case it will be a larger loss. The meeting remained inconclusive and we don't know exactly what is going to be the final outcome, but obviously efforts are on.
All right, Lata, many thanks for taking us through that story. Meanwhile, Telecom Department has released the draft National Telecom Policy earlier this week. Among other things, the draft policy aims at attracting investments worth $100 billion by 2020. They also plan to look for a sweet spot to price telecom spectrum just right. Ashwat Kumar caught up with the Secretary for the Telecom Department, Aruna Sundarajan, who is very optimistic about the policy and optimistic about the fact that the objectives laid out in the policy will indeed be met.
Is this an over-ambitious figure? Frankly, I don't think so. Because today, the world over, the backbone of infrastructure is actually shifting from the physical to digital. And India has an opportunity to leapfrog, precisely because we do have a deficit of conventional infrastructure. We have said that when we are looking at a pricing policy for spectrum, we need to do two things. First of all, spectrum is a scarce national resource. In the past, we've had only around 62% of spectrum being sold. Now, going forward, we must ensure that all the spectrum is sold, which means that we'll have to get the pricing right. Spectrum, we'll have to look at what is the state of development of a technology. We'll have to look at what is the ecosystem of device readiness. So I think the manner in which we design the auctions and the manner in which we price spectrum, you know, I think that will has a lot of scope for greater efficiencies.
All right, let's shift focus now to politics, and our focus is the state of Karnataka. Crop loan waiver of up to 1 lakh rupees, 1.5 lakh crore rupees for irrigation projects. BJP has released its manifesto for the state of Karnataka a week ahead of elections, and agriculture has got the top billing. The party has also made a slew of promises to women, which include sanitary pads for ₹1 and smartphones for women below poverty line families. Rukmini Rao joins in to take us through the long list of promises that BJP has made if they were to come to power. Rukmini, take us through what they have said.
Well, with just about a week left for polls, the BJP, in fact, today brought out its election manifesto with special thrust to the farming communities. Several welfare schemes being announced, keeping in mind the farmers of the state. In fact, BJP's chief ministerial candidate, B.S. Yediyurappa, going on to promise that the day he comes to power and takes oath, he will waive off crop loans of up to 1 lakh in both PSU as well as cooperative banks. Also, financial assistance of close to 10,000 rupees would be provided to small and marginal farmers in the state. The BJP also going on to say that they're looking at a massive outlay of 1.5 lakh crores as far as irrigation goes, and that they intend to complete all the projects by 2023. Also, interestingly, taking on Congress in several aspects. In fact, BJP has promised that they will be giving away smartphones to women in the in the BPL families, and also provide free laptops for all college joining students, and also give away sanitary napkins at ₹1 each. But also, most importantly, the BJP has said that it will be looking to revise the cow protection bill that it had in fact floated when it was in power way back in the state, and also giving emphasis to Bengaluru, BJP has promised that it will bring out an act called Nava Bengaluru Act, which will address all the special needs of the city and, of course, aim to make Bengaluru a garbage-free city going forward. Back to you.
All right, Rukmini, thanks very much for that. On to some tragedy now. More than 120 people have been killed in the dust storm creating havoc in Uttar Pradesh, Rajasthan and other states. The highest toll has been recorded in Uttar Pradesh, where over 70 people have been killed. Meanwhile, the Met Department has issued a fresh warning for more possible dust storms over the next 5 days. The states that have been warned include West Bengal, Odisha, Bihar and UP. The centre has also advised people in the affected areas to switch off their power and to remain indoors. All right, with that, we're going to wrap up this edition of What's Up. Many thanks for watching, but stay tuned to CNBC TV18. Up next, Dalal Street ended the week on a weak note. Both Sensex, Nifty shed 0.6% each, ending in the red for the week as well. Nifty Bank was the only major index to end the week on a positive note. Taking stock, taking the action forward. We'll be back with India Business Hour at 9 o'clock.